Hey everybody, I'm just doing a little sound check. Can you let me know if you can hear me? Okay, so Patrick is fighting with his Discord at the moment. So there's going to be a slight delay of a couple of minutes. But that gives me the perfect opportunity to ask all of you, how are you doing? What is on your mind these days? Is it economics? Excellent. Yeah, it's super hot here as well. Italian elections are on your mind, Ale. Yeah, wow. That's quite a situation. Some people with COVID as well. I hope you get an early recovery. I had it a month ago or something, and for me it was like a flu. So I hope you share that same fate. Pashan lost money shorting the bear rally. That's interesting, because it's stabilized. Yeah, China versus Taiwan is also that escalated quickly, I would say. But I guess people following the situation might have seen it coming. I guess that the visit was planned, or from Pelosi. Lian says, ESCOM is on my mind. Oh no, well, at least you are online now. ESCOM is South Africa's main power supplier, and it sucks. I can speak from experience when I still was in Cape Town. They have these blackouts called load shedding. And it's quite infuriating. Okay, so I will, let me see if I can call Patrick again. Let's see if he figured out Discord. There we go. I think this should work, no? Now we have sound. I put on the wrong sound. So is the sound working now? Yeah, it's back. Great, that's perfect. That was my bad. I was just saying that Patrick is still fighting with his Discord application. Let's see. Oh, he's back online. I'll just send him a message. And see if he picks up the phone. I can hear you, Patrick, but I can... Awesome, yes, I can see you. But the people cannot yet see you, but I'm going to change that. And I'm also going to test your sound. So maybe you can say something pleasant or unpleasant.
Testing.
All right.
You sounding good?
Yeah.
Okay.
And you're also on screen now.
Excellent.
And I'm not sure what you did, but the result is magnificent. You look absolutely great. I think you did something with the color corrections.
No, I actually wonder. I had like 500 programs open on this computer, so a restart might have just got everything going. So
Patrick, you are live now, so welcome to the stream. It's a pleasure to have you on, and I'm getting some signals from people in the chat that they can hear you, and they're extremely enthusiastic. Can you also see the chat, by the way, or otherwise I will read it to you?
no, I can't. No.
Okay, yeah. No, that's probably for the best because otherwise you can actually follow it on YouTube if you want and see it yourself. But I suppose the most smooth course of action is for me to help you out during some points in our conversation and read out the nicest and most interesting questions. How does that sound?
Sounds good.
All right. Well, then let me introduce you quickly. Although I think it probably won't be necessary, given that your channel is quite a bit bigger than mine, and also that I always see in my statistics that people watch your channel a lot as well. But for those who have been living under a rock, this is Patrick Boyle here with me, who is I think a finance professional still, a hedge fund manager, and also a professor.
Yeah, I no longer run business, but yeah.
Okay, all right. An ex hedge fund manager. Patrick, yeah, to start, I just wanted to ask you, basically as one educator who came to YouTube to another, why? What happened? Why are we looking at you every week these days?
Well, it's funny. My channel kind of started out as a way of at the university I just sort of was able to I was teaching a financial derivatives class, and as the exams approached the students would ask me all of these questions, can you explain this thing again? And I thought, well, it'd be easier if I just recorded it and provided them with links. And so it kind of started out as really just a tiny thing for my students at the university. And then, when the pandemic struck, it just seemed the world got really interested in finance. And my channel changed quite a bit just because there was sort of one event where back when the price of oil went negative and the whole world was sort of filled with confusion as to, why did this happen? And, when you teach a derivatives class, it's kind of a really interesting example for your students. So I put up a video explaining why oil prices went negative. And before that, like all of my videos got sort of 200 views from my students. And suddenly that one got maybe 20,000 views. And in a way, that was almost the start of, what is today my YouTube channel, which is just looking at kind of interesting things that are happening in finance markets and trying to understand them. So,
yeah. So you basically did the old YouTuber formula, like if something works, do more of that.
yeah, you end up working for the algorithm.
True. Yeah. Yeah. I can definitely recognize that. So I actually did had a similar experience in the sense that a lot of my earlier videos were more like lectures, and then I just found that there's this need for people to understand what's happening around us today through the lens of, in your case, I guess, finance, and in my case, economics.
Yeah, and actually, it's a funny thing because for the longest time, like when I first discovered YouTube, like back, I don't know, like 2006 or something like that. If you remember early YouTube, it was kind of more like TikTok, where it was all short videos of like a cat falling down a stairs or something. Like it wasn't great. And I remember coming across a channel by a guy named Justin Sanderco who teaches guitar. And it was amazing, because I was trying to learn the guitar, and suddenly I had this amazing instructor on YouTube teaching like everything I wanted to know. And I thought, wow, this is sort of an amazing platform. But I didn't necessarily ever picture myself putting content up. I was kind of a consumer of it. But I've always thought of YouTube as a really interesting and useful educational platform, because it's just quite cool that I guess even that's just what's cool about the internet in general is the fact that you have sort of so much knowledge at your fingertips. It's amazing, and so it's kind of cool to be able to contribute a little bit to that as well.
Yeah, and given that your channel is doing so well, did this also impact sort of other parts of your career? Have you started teaching less, or is that why you're no longer a hedge fund manager, or?
No, it's actually, well, partially even when I started doing the YouTube thing, I business and I sold it. And it was really sort of after selling the fund business that I started doing this. And I was kind of focused on initially on writing and things like that. I wrote a couple of textbooks and that kind of thing. And it, in all, YouTube hasn't really affected my life that much in that I think twice I've run into someone out in the public who's sort of seen my channel. It's a very interesting thing because you sort of sit in an office and you reach out to, sometimes hundreds of thousands of people, but it's an interesting kind of connected yet disconnected thing that sort of happens.
Yeah. Yeah, that does make sense. And but what about the time commitment, for example? Because I think YouTube has absolutely consumed my everyday life. And I was talking to you yesterday quickly, and you were very busy researching. So how is that part going for you?
Well, that's kind of interesting, but I wouldn't necessarily say that's changed my life too much, just because that's always what I've done. Like it's kind of you know, for me, since I sort of discovered financial markets, I've been kind of fascinated by them and just trying to work out what's going on. And I guess the big difference now is that I sort of share what I've worked out with an audience, while before, I didn't really do that. But
Yeah.
yeah, it's I don't know. I actually really enjoy sort of digging into things and just trying to understand them. And that's even, I think for someone who wants to have a career in financial markets, if you find yourself fascinated by that sort of thing, it's probably a good idea. And if you're not interested in it, well, there's probably not much of a way to change that, like it's I don't know, either something that fascinates you or it doesn't. So
Yeah, yeah, that makes sense. And I think that you also recognize this in your videos. So what I always really like about them is sort of how in detail you go compared to other YouTube channels. So, for example, I think especially you did a lot of reporting on the China crisis last year, and the detail you go into is it's much more detailed. Like, for example, remember you reporting on Evergrande and and all sorts of companies that were connected to them, whereas a typical YouTuber, in my experience, would maybe stop at Evergrande. I think that's also why people really appreciate you, at least partially. Do you recognize that?
yeah, I guess it's just that for myself, I want the full picture, and then when I explain it to someone, I want to explain, what I've learned. But actually, even a thing I noticed a little bit over the last year or two is even if someone has a question, like if someone wants the story of Evergrande explained to them, and they don't know much about China or emerging markets or the real estate business or all of these sort of interlocking stories that come together as Evergrande, if you try and dig through the press to understand it, all of the information will be there, but it will be really fragmented, because a journalist might write like 12 pieces on a given topic, but they don't ever then bring it all together into sort of a start to finish story. And in a
Hmm.
way, I think almost the thing that's interesting to do on YouTube is to sort of explain the full picture rather than sort of 20 fragments of the picture that can then, if someone really wants to put the work into it, they can assemble the jigsaw puzzle. But it's maybe, at least for me, fun to put the jigsaw puzzle together and explain it to people. So
Yeah, I think that that's something that the people over at Vox, also talk about a lot. So they say like there's this explaining the news sort of kind of trend, which is different from traditional journalism in the sense that you tell them all sorts of background story as well. Because like a newspaper just reports and sort of assumes that you're already up to date on everything.
yeah, well, I think to a reasonable extent, newspapers are kind of amongst the best places to go for information, but they are on a daily news cycle, so they're going to tell you what changed the story today rather than bring you up to date, like kind of say, we'll go back 30 years to China joined the WTO and how this turned into a real estate bubble, which then collapsed. And so, I fully understand that they're just doing kind of a different thing. And then a lot of the really good journalists, many of them will then, if they've covered a story and covered it really well, they'll turn it into a book, which is, of course, great. But even the speed of the publication cycle for books can be quite slow. So it can be sort of, we'll say like when the Bernie Madoff Ponzi scheme collapsed, it was kind of, I don't know, it was 2, 3 years later before really good books on that topic came out, just because it takes that long to, I guess, research and then get everything through the publishing houses. So
Yeah, and nowadays people just have to wait a week for the Patrick Boyle video on that. Patrick, I think we need to get into what we were supposed to talk about today. I wanted to talk to you about sort of what I coined the everything crisis, in the sense that we're living through such turbulent times, which is a bit of a cliche because people always say it. But then again, if I look back, sort of as an economist, we had this massive pandemic. Now we have inflation that we hadn't seen before, geopolitical turmoil that we haven't seen perhaps since the end of the Cold War, especially not when it comes to sort of the size of sanctions and what it's doing to gas prices. Then also one of your favorite industries, crypto, is collapsing. So what's your take on all of this? Because typically you report, but I would also, want to know sort of your own opinion on this kind of stuff. Are you scared?
Well, it's kind of an interesting thing. Like it's funny because I think there's always, as you mentioned, sort of always crises in markets. Like I sort of started in finance in the late 90s, and there was the bubble and boom of the dot-com stocks, and then we had September 11th, and then we had the build up to the credit crunch and that collapse. And so there's always, there's always drama in the world. I guess that's just the way the way humanity is. But I do agree with you. There seem to be a lot of things coming together right now. To a certain extent, I wonder if it's just that markets and everything have become more globalized, and so you just see higher correlation between markets. Because we'll say historically, individual countries might have economies that were much more distant from each other. While right now, even you see, as the United States starts hiking interest rates, you see impacts in emerging markets and so on. And I think the world is maybe just more interconnected. So there's maybe fewer places to hide than there were in the past. Like maybe 20 years ago, if one market was struggling, you could go to another. And to a certain extent, the crypto people were making the argument that Bitcoin or various crypto coins were an entirely separate ecosystem in which we'll say, for example, like the Bitcoiners for a while talked about it as a hedge for inflation because they felt inflation related to money printing.
Mm-hmm.
And, then inflation kicks in and crypto gets destroyed. I think we're just really seeing that maybe markets are becoming more risk on, risk off, and just a much higher correlation to each other. And that also means that investors struggle to get the same benefit from diversification that they used to in the past.
Yeah, and do you also see this across markets? So I definitely agree that I see it across countries. We economists even have like an official term for this, which is the global financial cycle, meaning that sort of countries are much more correlated and also react much more strongly to monetary policy decisions, so hiking or lowering interest rates in the United States. But do you also see it across markets? So was this different in the dot-com? I think at that time, the housing market didn't seem to be that much affected by the stock market, for example.
Well, it's interesting. I'm slightly fascinated by the overlaps between the dot-com bubble and the recent market conditions, because for a long time I argued that things weren't as bubbly a year or two ago as they were in the late 90s, because there's almost when you look at the valuation some companies had in 1999, like it was absolutely insane. And markets were very different back then, in that companies used to IPO in order to raise capital. Now they raise capital in private markets and they IPO at multi-billion-dollar valuations, while in 1999 you would see these dot-com startups that were sort of three guys in a rented office 2 months later IPOing on the Nasdaq for a significant chunk of change. The stock market didn't get as overdone this time around, but it would appear to me that maybe that was because things like crypto took in so much of the froth, and a
Hmm.
lot of the arguments that I hear from young people who invest in crypto are the exact same arguments that young people were making in the late 1990s about the dot-com startups. So I slightly wonder if sort of traditional some of this froth, there were other places for the money to go.
So you just broke up a little bit at the end of that sentence on my side. Can you
Oh,
maybe
I'm
repeat
sorry.
that?
I was saying I wonder if the reason things are a little bit less frothy in the stock market 6 months ago.
Uh-oh. I think we lost Patrick. Can you let me know in the chat if you can still hear Patrick? Let me just ask him. We seem to be running into some technical difficulties. DDoS, the crypto bros hacked him. Damn it. Oh, yeah.
Are we back?
Yes, you're back. Oh, man. I asked you to repeat the sentence, and now I have to ask you again.
Uh, Oh, sorry. Yeah, I was just saying that um, it's possible that the stock market looked a little bit less frothy 6 months ago simply because the place where the kind of crazy money was going was crypto rather than the stock market. There were just different places for people to go with their money. So
Yeah. So I have like I can relate. I have a question for you about crypto because so many people ask me to ask you about crypto. So we'll get to that. But before that, I was wondering. So I always try to. I'm looking at the same things, of course, in the markets as well, but from an economist perspective, and I always try to relate it to this theory by Robert Shiller, whom I think you may know.
yeah.
But sort of he's like from the behavioral finance space, and what he often says is like if there's irrational exuberance, so if basically like the point, like if your neighbor is giving you like Patrick Boyle, an ex-hedge fund manager, stock tips, then you're in a bubble. And no, I was maybe a little bit too young at the time, but I heard stories that this was the case during the dot-com bubble. This was definitely the case crypto 2017. Then I made a video about crypto early in this cycle, and I thought it wasn't the case. But now I use the barometer of how much spam comments I get about investing in crypto to get an idea of where we are in that bubble cycle of irrational exuberance. Do you also relate
Yeah,
to that?
well, yeah, it's an interesting idea. The funny thing with the spam comments, because I get them on my channel too, and I'm always trying to get rid of them. But it made me laugh, like even kind of 2 weeks ago when I don't know, Bitcoin was down like 50 or 60% on the year. You'd have these, the way they put these sort of fake conversations within the chat under your videos, and there'd be these chats kind of going, "Crypto's definitely the best place to make money right now," and you're looking at it and you're like, "Wow!" Like they really, like they don't even care. Like they're just using the same conversation, even though the entire thing has collapsed.
Yeah.
It's interesting. I do think there is a thing of people getting really drawn into the markets at certain points. And there's a book that I really enjoy that's called Market Sense and Nonsense by Jack Schwager and all of those market wizards books and that sort of thing. But this book is kind of a really interesting one in that he kind of unpicks a few ideas around the efficient markets hypothesis. But there's, how do you know that things are getting frothy? It's always, gosh, it's kind of hard to tell because things always change. And I worry as well that if you were to kind of take the sort of shoeshine boy example. I think the famous story from that, it might have been Jesse Livermore, one of these guys who got a stock tip from his shoeshine boy and kind of decided that the market had peaked in 1929.
Hmm.
And that's sort of gone down in market lore. But the problem with that is that possibly you're always too early. There's the opposite argument to that is George Soros's argument, which is that he sort of feels that these things kind of cycle up and cycle down, and he says that Thea should pop to it because has the potential of expanding and expanding, and then the trick is to get out before it bursts, but he doesn't really he doesn't advocate reversing psychology. He advocates almost kind of joining in, but being aware that things are not normal. So
Yeah. So does this also relate to what you teach as a finance professor, like efficient market hypothesis, but then all the deviations from it?
yeah, I mean, it's a funny thing because I never love when people kind of come out and sort of say the efficient market hypothesis is rubbish because it's not, and I think it really is a good rule of thumb for most investors, especially if you're kind of planning on just sort of spending a few hours a week on your investment portfolio. It's probably a good approach just to think of things as efficient. But the truth is, at least the really hard view of the efficient markets hypothesis doesn't necessarily stand up to a ton of scrutiny in that we can find all sorts of things that are unusual and that are sort of what can I say, like sort of special cases where they don't make sense within that context. One of the earlier ones that was because I graduated university very much with that EMH point of view,
Hmm.
and I remember in the late 90s there was no one will remember this device. It was before the BlackBerry. There was a device you could buy called a Palm Pilot. Do you know what that is at all? Or
Was it
it,
like with the stylus?
exactly. It was kind of the first handheld computer, and there were in truth terrible things, but the world got very excited about them. It was kind of pre-BlackBerry smartphone kind of thing, but without a phone. And but the company Palm Pilot was owned by a larger business called 3Com, and 3Com spun off a big chunk of Palm, maybe 40% of it or something like that, as a separate traded company. Or no, maybe they spun off 60% and held 40%. I forget exactly. But the value of Palm exploded. Like it was one of those really hot stocks in the late 1990s, while 3Com sort of languished. And if you looked at it, if you bought 3Com, you were buying Palm at maybe like a quarter of its actual price. And so, of course, a lot of smart people said, well, what you want to do is Palm and go long through.
Oh no, I think we lost Patrick again. Talking about an exciting story, buying handheld computers. Let me try to notify him at least. Gerald says, would not believe that Patrick left school with the EMA to efficient market hypothesis view and ended up being in a hedge fund. What a plot twist. Yeah, that's true. Now, this was a real cliffhanger, huh? Because I'm actually now wondering what I think he's going towards this Palm story actually being rational, but he really left us hanging there. Let me just send him a few messages. I think he should come back to us. Maybe I can read the chat in the meantime. So if it was the crypto people before trying to cancel Patrick, who do you think it was now? Yeah, Ben says best UK internet versus worst Dutch internet. No. I'm actually at at Belgium internet, and I think Patrick is back in the United States at the moment. But I think it's a problem on his side, given that you all can still see me. I can't even seem to be... Oh, I think he's coming back. Okay. The cliffhanger will be resolved.
Okay, sorry, I don't know what's going on.
Patrick, this was the perfect timing. You left us with a massive cliffhanger. So Palm was trading at a hugely high prices, but the parent company was not. And I'm like, what? How does the story end?
Well, the funny thing was that, you might think, like, if you were an advocate of the efficient markets hypothesis, you might say, well, this is a quirky thing that happened on the side with a tiny little stock. But this was something that was all over the newspapers. Like, I bet there were a dozen articles in the Wall Street Journal about the puzzle of why is Palm doing this? And throughout my career, you just see hundreds of examples like this. Like, even we'll say, for example, the meme stock thing, like in a truly efficient market, like in sort of any version of EMH, that wouldn't happen. And so there are enough examples to say that things are not perfectly priced in markets. And even a while ago, a friend pointed out to me a rather interesting hole in EMH is just even the idea that if every asset was perfectly priced within markets, there wouldn't be an insurance business, for example, because whenever you buy insurance, you're overpaying for an asset, like in order to feel better about, in order to reduce your risk or whatever. But it's not something that should necessarily exist in a purely efficient market. So I think that markets are mostly efficient. I think that it's for most investors, it's probably reasonable to spend your time doing what you do for work in order to earn money and then invest in like passive indexes or whatever. But the pure idea of the efficient market hypothesis doesn't really hold up to an awful lot of examination, or at least not that sort of really perfect view of EMH.
Yeah, and you also mentioned like the hard view, like, well, but with your example, I wonder if economists wouldn't then come up to you and say, but this is different risk preferences for investors, so it is still efficient to have that some risk-averse investors want some insurance. What do you think of that? Would that be a counter argument?
It's a funny thing because I think we all understand, like, there's no confusion as to why people buy insurance. And actually, there's not even confusion as to why people overpay for insurance. It's because, essentially they're in a, we'll say, for example, like if you buy a phone or something like that, and it's like a $200 item and they charge you $50 to insure it, you would say, well, that's not a fair insurance premium. Why does anyone pay it? And it's like, well, the answer is that they're too lazy to look into other things. But the really hard version of EMH assumes that everything is perfectly priced, that all information is encapsulated, and not just all public information, but even all private information is encapsulated in pricing. And that's not really the case. It just, like I said, it probably doesn't justify everyone moving away and becoming a trader for a living. But it does tell you that that there are opportunities out there for people who make kind of cool-headed decisions. But of course, the problem is that we all think that we make cool-headed decisions, but we tend not to. So.
And actually, I see now that we have a celebrity watching our live stream, Patrick. In the chat, I see someone whom you might know as the famous YouTube giant Richard Coffin from the Plain Bagel, asking you a question on the topic of efficient market hypothesis. Do you think markets have broadly become more efficient as access to markets has risen, or have retail traders impaired price discovery? A GameStop type of question.
Well, that is a very interesting question. I think it's reasonable to expect things to get more efficient over time, but actually, the last year and the whole meme stock thing is actually just it really highlights um, a lack of well, gosh, are they adding? It's funny because even did the sort of short squeeze traders trade on a sensible decision? They kind of did in that they understood there was a weakness in the market and they pushed on that weakness and it provided a profit for them. But the funny thing is that you have kind of two things in there because I think there's a handful of people, like a tiny number of people who actually profited from that, like who got in early, saw the short squeeze was likely to happen, and maybe even got out when the short squeeze occurred. But to this day, there's a bunch of people who bought sort of 50% higher than many of those stocks are trading at right now. And, day by day, they're sort of waiting for the next short squeeze to come. So it's interesting because I bet more money was lost by retail investors in that, in the meme stocks than was made by them, and that is sort of the difficulty in trading is that in particular when people take a short-term view is that it tends to be a sort of a zero-sum game, less commissions, and so the middlemen do very well out of such situations, and it's difficult to to if you're arriving late to the party. Firstly, no one ever realizes they're arriving late to the party, but that those people end up often contributing more to the market than the ones who initially profited.
So this is why I really liked you joining the stream, Patrick, in the sense that I think our channels overlap quite a bit, right? In the sense that we are now having a very economic, finance, overlappy kind of discussion about the efficient market hypothesis. So I was thinking before we move to your favorite asset class, crypto, perhaps we can take some questions. How do you like that idea?
Sounds good.
Okay, let me just scroll through the questions and see if there are some funny ones or especially well thought out ones. Well, at least there are some opinions. So this is, Patrick, something that I always like about these the chat as well, that people have conversations amongst each other that I'm then completely oblivious to. But JP72 thinks that markets are getting more efficient because there's more efficient access to information. Sure, there may be more retail investors now, but plenty have moved to index funds, making markets less noisy.
I wouldn't really think of index fund investors as purely retail. Like, I think that's if you are a retail investor, that's probably a decent approach. But I think, at least in the current environment, when people talk about retail, I think they're generally talking about sort of, individual accounts who are actively investing rather than, sort of people who dollar cost average into their retirement accounts. But
so another question from Frederico, who says, I wonder if Patrick knows anything about Elliott waves and what he thinks about it, if he knows about it. I don't know who Elliott waves is, but perhaps you do.
Well, Elliott waves are sort of a form of technical analysis, and well, it's interesting because my career, like most of my trading, has been based on statistical analysis, basically looking at price moves and trying to find something predictive in them. And Elliott wave is a type of technical analysis, and so the early days of what I do, I kind of got every book on technical analysis and basically every book on anyone's market theories that I could find, and tried to backtest them in order to work out kind of what works and what doesn't work in markets. And so it's quite easy just to look at the big ideas out there and test them. Unfortunately, the problem with Elliott wave is that it's entirely untestable. You know, if you speak to kind of three or four different practitioners, they'll all tell you that the market is on a different wave or whatever. And so I I'm not a fan of that approach. It slightly strikes me as pseudoscience, you know, where they take on all of these technical terms. But if you can't, if everyone can't agree that you know that something is that the signal has occurred, it makes it impossible to test, and therefore it's sort of an unfalsifiable hypothesis is the problem with that. And there's a lot of things within the technical analysis space that are very you know, I'm not sure if it's deliberate, but I think there's an awful lot of unfalsifiable hypotheses put forth. And to me, I think it's better because I'm someone who tests things. Like my whole way of working is to hear a theory and then to dig through the data and see whether that makes sense or not. You know, I don't have an awful lot of interest in things that sort of are vague and difficult to test.
Hey, and I've seen one other interesting question. I think we can take, or you can take, before we move on to the next subject. There are some economics questions. I would love to talk to you about that as well, but I think we should answer them, after we talked about that. But this is maybe already a little bit of a bridge. Someone was asking, do you think that central bank interventions have made markets less efficient? So ultra low interest rates, quantitative easing, and all of that.
You agree that maybe markets have become more fragile because of excess intervention, you know, because I I think in a way, you know, losses teach us lessons or you know, sort of what can I say? Pain in markets teaches us lessons and we don't repeat our mistakes. And to a certain extent, over the years, in particular in sort of developed markets, we've seen this thing where if things go wrong, you know, the Federal Reserve or something is, what can I say, the regulators kind of step in order to calm things down and improve things. And, you know, you'll see these, I don't know, even minor fluctuations in the market that the central bank get into a panic over and decide a rate cut is needed or whatever. And I worry that that makes investors excessively complacent. You know, like I think to a certain extent, having to deal with the consequences of big events. Like I'm one of the few people in finance who thought that it was a good thing that Lehman Brothers went bust because I think it was important that there be a lesson that there is a consequence to sort of ill thought out risk taking and I think it's harmful. The too big to fail idea is dangerous in markets, in my opinion. Now, not everyone agrees with me on that, but
Well, I mean that brings us to a question that someone actually asked me on a post, which I announced our conversation, and that is to please find something that we disagree about. And I think there we have it, in the sense that I do agree with you that it's pretty ridiculous to bail out an institution full of super wealthy people who just did stupid stuff. But as a central banker, for example, I made this big video on Japan. I do understand why they bail out banks. I don't think I think it's something we want to get rid of, but we have sort of outsourced the whole monetary system to private banks, and if they collapse and they take each other with them, then we no longer have a monetary system. And so I do also understand why you would bail out banks, even though I would hope that you can
well,
find ways
you
around
would
that.
maybe, and I imagine that many lessons have been learned from the financial crisis, and I would hope that the idea going forward would be that, because I think pre the financial crisis, I'm not really sure that central bankers thought it would happen, and thus they maybe didn't fully have a plan as to how to implement things. And it very much at the time felt like things were thrown together over a weekend, which I think they probably were.
Mm-hmm.
But maybe in the longer run, a better idea is like if bailouts have to occur, um, that they would maybe have to occur or that they should occur in a way that so that the people who made the mistakes didn't walk away with large bonuses and whatever. Because I think that's really more the the injustice that occurred. But even if we
Mm.
step away from the too big to fail thing, I worry that maybe smoothing the path too much for investors um, allows them and maybe encourages them to behave in a manner where they believe that they'll always be bailed out. Like even the current thing. When we look at there's a lot of investors who piled into the markets in 2020 during towards the start of the COVID pandemic, and really all they saw was this huge rush upwards, the sort of stonks only go up kind of meme. And the thing is that is not the way the world works, and in a way it's good to be through a few cycles of financial markets to understand how things can go wrong, and therefore it's important maybe that things occasionally go wrong in order to sort of strengthen the what can I say? I think it's probably makes markets more stable if, in a funny way, if they're allowed to be a little bit less stable.
Yeah. No, I mean, I think we can definitely sort of maybe find a middle ground on this in the sense that I always get the impression that it's very much, even though we like to discuss about the sort of the big actions, like to bail out a bank or not to bail out a bank, I think it very often really boils down to how you bail out a bank, in the sense that, if I were to say, hey, Patrick, the three biggest European banks are about to implode, let's bail them out, but let's nationalize them, let's treat them as a utility from here on out, and let's fire the people who were in charge. Then then you might say, well, let me know. Oh, okay, fair enough. Like that, we can do
Yeah.
it, right?
Well, it's an interesting concept because sort of over the financial crisis, there was almost this idea that bondholders could never lose. And of course, there is a credit spread on bonds that relates, you are being paid when you invest in a bond, you're being paid a credit spread because you're taking on risk. And well, a good example would be even the way the crisis occurred in Ireland, where there was this idea that we couldn't possibly allow bondholders to ever lose. And it's like, well, then they're all government bonds, then they all should be priced as government bonds if that's how they're to be treated. While it becomes
Hmm.
an interesting thing where people sort of invest in a risky security, and then when things go wrong, they kind of go, oh, but I shouldn't be exposed to this risk. I shouldn't be exposed to losses. So
Yeah. No, and I guess we're getting sort of into the territory where people will say, well, there's like corporate socialism, and that's, I think, also definitely a bad thing, in the sense that like these very wealthy people do get bailouts, and then at the bottom, they much more often don't. Um, but I think we should definitely make, both of us should maybe make some more videos about that, because I think there's a lot there. But I did have another question from a supporter who says, what do you think about the current level of corporate debt, and what role that might play in future crises?
unfortunately, without doing some research, I don't have a good answer to that. Unfortunately, I'd just be making something up if I gave you an answer. So,
I think that's fair enough. What I do know is that sort of all debt is at record high levels, and I think that is something that is worrying many economists, and maybe would make this crisis moment more dangerous than the 2001 moment, for example, more similar to the 2007 moment. So household debt is once again at record levels. I think in many countries corporate debt is as well. Government debt is also super high. Yeah. So if I can answer that question, then for you, I think that might make a future crisis much more risky. Okay. Do you want to move on to a different subject,
Sure.
Patrick? I think we should also talk maybe macroeconomics. I'm not sure how long you still have.
I'm fine. Yeah.
All right. Okay. Then let's keep going. But before that, I just wanted to get your quick thoughts on the crypto space, because you do come across as a bit of a skeptic, and I think you also mentioned to me at some point that if you do crypto videos, you get the most lovely hate comments. So what is your view on crypto?
Well, I actually just find it fascinating. You know, I think the thing that interests me the most about crypto is just that it's opened a conversation as to what does money even mean, you know, and that's kind of a question I've found myself pursuing on my channel. Like there's all sorts of interesting things. You know, I made a video about John Law, the sort of I don't know if you come the inventor of paper money and also the Mississippi Company. He's kind of a fascinating person, but it's a very interesting thing to look at the world when it went from this idea of using gold coin or precious metals to using paper money. And it's fascinating in that, you know, the problem, like Europe had quite a problem at the time, at least England, France, many of the countries had this problem of there not being enough coin to go around. And so essentially commerce was grinding to a halt because there wasn't a good means of exchange. And so John Law came up with a bunch of different ideas, eventually settling on at first kind of gold-backed paper currency in France. And when this money became available, there was a huge economic boom in France. And by that, I don't mean like people spending money on frivolous things, but like big engineering projects, bridges, all sorts of things were built because there was a means for people to both, to sort of save your work, which is kind of what money does. It allows you to work today, but to sort of store the benefit of that work for another point in time. And so it's interesting that when people have an ability to do that, they tend to be more productive. So we had this huge burst in productivity in France, but then, of course, we kind of ran into rather quickly because it was all new. There was sort of, excessive speculation. Too much money was printed, and it all went to zero. But it was a fascinating time in history and an interesting experiment. So that's one thought on money. We equally then can look at things like the wildcat banking era in the United States, where there were all sorts of private currencies. And actually, the idea of private currencies has been around for an awfully long time.
Yeah.
And seems to kind of work. Like it's what's interesting about this stuff is that it all to a certain extent depends on faith and on trust. And the final example that sort of fascinates me that I tie into crypto is in the I think it was in 1970 in Ireland for about a year and a half. All of the banks shut down. They all went on strike. So the country was running with no banking system whatsoever. And so that any economist would look at this and kind of think, well, the entire nation, the entire economic system will collapse in a couple of weeks. While instead, for over a year, things not only did they kind of go along as normal, but the economy actually grew. And it was largely because the local pubs just took people's checks and so on. And, you know, the publican knew his customers and he knew kind of who was good credit and who was bad credit. And basically everyone dealt with each other on a system of credit that seemed to kind of work. And in fact, there were no hiccups. And it amused me because I discovered this story, I don't know, maybe about a year ago.
Yeah.
And I spoke to some older relatives of mine in Ireland. And I said, this interesting thing happened in Ireland. Like, what are your memories of it? And they were like, yeah, I don't know. It's just this thing that happened. Like, none of them even thought it was interesting or unusual, even though this kind of wild experiment had occurred. But everything just got by. And what interested me, as a comparison with the world of crypto, was that in crypto, the idea is to search for sort of trustless systems, while, at least in that example, a very trust-based system was kind of how society and the overall economy managed to move ahead. And so I wouldn't necessarily say that I'm anti-crypto. I'm interested in it and I find it kind of a puzzle, and I find that there's a huge history of very similar things, that occurred throughout history. Even the proof of work idea of crypto slightly fascinates me because now I'm not able to remember the name, but the polished seashell beads, what was it called?
Oh yeah.
The
Yeah.
Native Americans used them. I forget there's a name for it. Someone will tell us in the comments.
Yeah.
But basically that's a form of proof of work in that seashells are common, but it would take a Native American craftsman maybe half a day to carve and polish one bead. And so then people used these beads as money, and and they actually did have a scarcity because there was this huge amount of work involved in making them. So there's many ideas in crypto that possibly look newer than they are, or at least you can find interesting historic examples that relate to them. And so I unfortunately I don't see an awful lot of use in crypto. In that, like when I look at a lot of history, we'll say just the idea of private currencies usually fit in places where there was a big flaw in standard currency. So we'll say, for
Yeah.
example, in the United States, there were no small denomination notes. Like the smallest, when the dollars first came out, the smallest unit of currency, I think, was I forget whether it was a $1 or a $5 bill, but essentially it would have related to about a week or 2 weeks work for a tradesman. And so all of these private currencies appeared as a means for people to buy a newspaper or a loaf of bread and that kind of thing. While when people say, "Oh, we need an electronic form of payment on the internet," and it's like, well, the Visa network exists, and I appreciate, I too am frustrated with the often the high cost of the banking system. But it would appear to me that often, having run an investment fund, I'm aware that, like, it's very frustrating. We'll say if you want to convert money from one currency into another, how expensive it can be, especially from a retail perspective. But the reason it is that expensive relates often more to regulation than it does to profiteering from the banks, because the banks aren't that profitable. When you look at like the huge spreads on foreign exchange, the banks aren't actually that profitable. And it's the truth is that they have to do a ton of paperwork
Yeah.
when they onboard a client and maybe move a couple of $100,000 into another currency, and they have to check that all sorts of money laundering and tax rules are being followed. And the reason that a lot of kind of fintech or crypto stuff appears to be, well, and is cheaper, is simply that they are sidestepping a lot of that regulation that banks are not allowed to sidestep. So,
Yeah. Wow. So there's a lot to unpack there, Patrick. First of all, I think it would be you might actually find it very interesting to hear about it, like a couple of much older examples of paper money. I think the Chinese were the first ones to have paper money. And what I also found fascinating is that when I studied ancient Greece a little bit in one of my earliest videos, that they had a lot of deposit money already before paper money, in the sense that this was just in a ledger written down. You had to actually go to the bank and with someone else, and they would make the transaction for you in a centralized ledger a very long time ago already.
Yeah.
But I agree with you that this is also what drew me to crypto. This is why I had some crypto guests on as well. Never to talk about how rich you can get with crypto, because I think most of that is a scam. But I really find it interesting, some of the experiments that they are doing with trying to create private currencies. But also, like you mentioned, you just don't see that much of it being used for real economic activity. You see a lot of these stablecoins being used to gamble more in financial markets, but not that many to actually buy stuff, and that's a shame.
The problem is that if the entire advantage that they have, which is sort of theoretically lower transaction costs, that comes from being sort of outside the law, like from not being regulated.
Yeah.
And who is going to run a business that's outside the law? That the answer, unfortunately, seems to be outlaws, And a good example, like to compare it to a regular business, you could say, why is it cheaper to stay at an Airbnb than it is to stay at a hotel? And the answer is that hotels have all sorts of regulations that they have to comply to, and Airbnbs don't. And so once again, you end up maybe with a non-level playing field between the two. And yeah, I mean, it's sort of it is what it is. But the other thing actually that fascinates me a little bit about crypto, and it just ties into concepts around financial regulation, is that I'm often amazed, people will lose some money, we'll say, in some crypto scam, and they'll kind of rail online and say, like, why is the SEC doing nothing to protect my stolen monkey JPEGs? And the funny thing, I think there's an interesting thing that we all fall foul of, maybe, is the idea that, and it's back even to the idea of sort of too big to fail ideas and so on, is that most of us, when we live within a regulated financial system, we kind of believe that there are protections there in place for us that are actually only in place for us in the regulated financial system. And so, for example, if and there is, of course, then this cost to regulation, but a lot of people often, I think that people don't understand the risk difference between, when they move outside of that system. And it's even, a good example is even like pre the whole crypto thing, you would see this in the area of like private investments in companies where people didn't necessarily understand that there's a big difference between the audited statements that you'll see from an exchange listed company and the kind of financial statements you might get from a friend of yours who has a startup company that you've put money into. And I think that it's an interesting thing, because to a certain extent you could argue the regulators are somewhat to blame in that, or at least regulated financial systems make people think that they are safe, and that financial markets are safe. And then they go out into the wilds of crypto or private investments and find themselves being eaten alive. And they're like, well, where did all of these sharks come from? And it's like, well, you're in the deep sea now. You're no longer in the little pond you used to be in. And so that's also a fascinating thing to me about crypto, is just the almost the confusion that people have. Like they sort of say, well, isn't it illegal for Elon Musk to pump Dogecoin? And it's like, well, not really. Like, it's just it's not a security. It's not even a defined thing. The day might come when some regulation exists around that. But at the moment, even it's even interesting right now that the SEC are prosecuting people for insider trading in the crypto space because it doesn't it's not obvious that a lot of that stuff fits within the existing regulatory framework. Like in many ways, you could argue that a lot of crypto is sort of like buying stuff on eBay rather than investing in a stock or a bond.
And have I'm not sure if I can ask you this question because you're a finance professional, but have you swum in the deep sea yourself?
I don't invest in any crypto. Simply, there's a list of reasons why. Um, One is that I don't feel I know an awful lot about it. Like I don't know enough about it. I tend to like really deep liquid markets because my main trading is in financial futures, and I have a good system for investing that I've used for over 20 years. And since I no longer own the fund that I started, but I still run the investment strategy, but
Hmm.
with my own money. And that works for me. And so to a certain extent, I kind of it makes sense to me to do what I know rather than to sort of step out into another thing. But I even feel that there's many risks. There's reputation risks also associated with crypto that I don't think people are really talking about very much right now. But for example, there's a guy I know who ended up in discussion with regulators relating to money laundering because of his crypto trading. And the problem with crypto trading is, of course, you don't know who you're dealing with, right? And so, in many ways, you might think of yourself as buying and selling crypto tokens, but if the other side of that transaction is a money launderer,
Hmm.
just because you don't know that you're aiding in money laundering doesn't mean that you're not, and doesn't mean that the regulators won't be upset about that. And so I worry that a lot of people could in the future find themselves in trouble over issues like that. And it just doesn't, I don't really see such opportunity for me in that space for it to be worthwhile me getting too involved, So
Yeah.
I kind of more view it as an interesting puzzle and an example than I do something that I would get involved in.
Can that also be tied to sort of the argument that a lot of crypto enthusiasts make, like that the institutional big money is about to start investing in crypto, but if it's not, if it's already too risky from a legal perspective for you, then that surely would be the case for a bank or hedge fund as well, right? Or do they have enough lawyers to get around that? Do you think?
You know, the thing is that there's always someone who'll do these things. Like even when something, just because something's unethical doesn't mean people won't do it. And there are plenty of hedge funds who already invest. In fact, it was funny. Back when I launched my fund, the one of the service providers I was using told me that the majority of the funds, that was what it was in around 2011, he said to me that he was dealing with tons of crypto funds at the time, so that existed, more than 10 years ago. Um, the thing is, the real question is at what point do, what can I say, like the really big respectable investors get into crypto? Like the question is, when will your mom own Bitcoin? And if you can't picture that ever happening, then maybe it never goes fully mainstream. Because if you think about it, like when we look at the distribution of wealth in most Western society, it tends to be stacked towards the baby boomer generation. And it's not obvious to me that they have any urge to sort of step outside of the traditional financial system to get involved in a lot of these things.
Yeah. All right. So no swimming in the deep sea for you. Also not for me, by the way. I always thought, hey, this is a bubble, and I think you can make good money in a bubble, but it's not necessarily my field of expertise, and so I wouldn't get into that. And I think I heard you made a similar argument. But shall we take some crypto questions and then move on to talk maybe a little bit about macroeconomics and the markets? I think I even had it in the thumbnail, Boyle and macro. So let me have a look at. Do you have some crypto-related questions for us? I think there is some agreement. Also, Luke asks, isn't it also problematic that crypto has no intrinsic value where it isn't tied to anything really? Like the euro is tied to the Eurozone market, giving it value. How does crypto obtain value? What do you think about that?
You know, once again, that's one of the things that fascinates me because it I could easily dismiss it in that way, and we could walk through a whole bunch of examples of why it's definitely worth nothing. You know, ages ago I saw a video that Nassim Taleb put up where he kind of, you know, tried to build a discounted cash flow model of cryptocurrencies, and obviously it came to zero because the cash flows were zero. But there's many other things that have no cash flows that seem to have value. And I made a video on this topic looking at collectibles and trying to relate them to cryptocurrency, because or at least the NFT space in crypto. But, you know, for example, like rare stamps, like I would have no urge to own a rare stamp. Like I would get no joy out of having this thing in a safe in my home. There must be someone who does because they spend fortunes on it, or even artworks. There's lots of things that have no intrinsic value. A good example would be even things like if you owned like the Fender Stratocaster that Jimi Hendrix had played, you know, that would be an item of huge value, but it's a value that's almost it's almost like a religious relic, you know, that a saint has touched, you know, and anyone who thinks really rationally would say, well, that's a 1960s Stratocaster. It's worth the same as all other 1960s Stratocasters, but the world doesn't agree with you. And so in a similar way, like I think once again, this is kind of what makes crypto interesting, is that you can definitely make sort of hard level-headed arguments that it's definitely worth nothing, but equally you can find other things that have a long history of holding their value that should also be worth nothing. You know, you could argue, even we'll say antique furniture, like couldn't a craftsman today bang out a whole bunch of perfect replicas? Actually, a friend of mine is a great violinist, and he's played a number of Stradivarius violins. And he said to me, they're not necessarily the best violins in the world. He says they're all different. They're not necessarily amazing. They're often quite quirky instruments. They don't necessarily sound a whole lot better than a new instrument, but they're very special. And so there's just lots of stuff in the world that has a value because it has a value, and the longer the history of a thing having a value, the more likely it is to hold up. It would seem.
Yeah, yeah. No, I mean, I'm just gonna see if I actually have them here. But for me, it all clicked when someone was talking about NFTs.
Yeah.
And they compared it to like Pokemon cards. I'm not sure if people can actually see this, but also, like, I just had a couple of old ones lying around from my youth, but then people told me like, oh, this card is in good condition. Again, I was like, oh yeah, but it's actually in Dutch, so the language is in Dutch, and then the value is like much less. But for sort of most practical purposes, that doesn't matter, right? And even more silly, they have like I think this
actually,
edition stamp or something.
I would have thought that adds a rarity value to it, but I guess not.
Yeah, but I guess most collectors are in the US,
American,
UK, and yeah, exactly. So that sort of, and especially like they have like a little sort of first edition or something like that, and that someone explained to me, it was like, yeah, but that card, the first edition, is obviously worth more than the non-first edition, and I was like, yeah, I agree. That makes intuitive sense, and so that they tied that to NFTs, saying like, hey, this your unique NFT. Of course, the card, right? The card and the picture, and you're using it in a Pokemon game is the same value, but still it's
Yeah.
worth more. I thought that was interesting.
Yeah, well, actually, it's just sort of what the things that attain value. It's a fascinating thing because even to a certain extent, it relies on one really convincing person out there who's able to tell. Like there must be, like to be honest, I have no idea why anyone cares about Pokemon cards. It's similar to stamps. Like I just don't get it. But there must once in a while be some really influential person like the Kim Kardashian of stamp collecting that convinced all of these other people that it's a worthwhile hobby and that certain ones are worth millions of dollars, you know. And then that's held. So
Yeah, and just to be clear, I think still I think most NFTs are practically worthless, and most of their value came from people thinking the value would go up, right? And I think
yeah,
that's also the
you
case
know,
for Bitcoin.
it's kind of interesting. Like there was a very funny video I saw a while ago where like an art critic looked at the various valuable NFTs. And they even pointed out like the fact that I guess they come in editions of 10,000, which doesn't strike me as unusually rare either, just to be clear. Um, they come in editions of 10,000, and it would be a lot of work to churn out 10,000 different monkey drawings. And so, of course, they use templates, and they'll just sort of throw a scarf on 10% of them and throw, a cigar in the mouth of another X% or whatever. But when you look at the overall collections, they're a rather incoherent, like no actual artist would come up with sort of such incoherent images because they would have put more work into something that they expected to have value. So
Yeah. So and yeah, just tying it all back to sort of the intrinsic value for Bitcoin, because I think that was what sparked this small, me showing off my shiny Dragonite, which the plain bagel actually is very jealous of. He told us in the chat. But I think the value of Bitcoin. I thought that was interesting when it first came out. I was doing a finance master at the time, and I tried to sort of. I think a lot of people at the time tried to apply the discounted cash flow method to it, and that doesn't work at all because there are no cash flows.
yeah.
But you can. I think there is some inherent value from its currency usage, which is sometimes used, especially in emerging markets. But most of it, I think, just like with NFTs, are get value because people expect it to go up, because people expect someone else to pay more for it, right? And that's very
Even
volatile.
I think there's other fascinating ideas in there. Like if we even look into kind of some of the fintech and Web3 ideas, where these things are pitched on sort of two angles. One idea is that these things are better because there's no middleman, right? Like the whole idea is that you can all because in a way, when Bitcoin first came out, I almost thought that it would be like PayPal. I didn't really understand it, and I thought, well, actually, it would be nice to have a good way of transacting online.
Yeah.
And PayPal was supposed to be that, but the fees were always so high. Like, I don't, if you've ever used PayPal, I don't know what happens, but you never seem to get as much money out of it as goes in.
I'm always disappointed when I have a sponsor that wants to pay me in PayPal.
Yeah, like it's amazing how high the I don't even know what they are, but they seem to be unusually high. Um, but and also there's all sorts of I don't know it doesn't seem like a great system to me. But then and so I initially thought that maybe a Bitcoin would be sort of a form of PayPal without the high fees, which of course would have been an interesting concept. But when we look at a lot of the crypto space, on one hand, they pitch to you as a user that will say, for example, that you'll be able to exchange currencies at almost no cost, which seems like a great thing. But then they kind of tell you that if you sort of seed these smart contracts or whatever, these DeFi protocols that will do the transactions, that you'll make a lot of money. And it's like, well, if someone's making a lot of money,
Yeah.
the money's not coming from nowhere, right? So and if they're making more money than a bank makes on foreign exchange, the fees must be higher than they are on foreign. So one of the two parties is being lied to, either the person who feels they're transacting at no cost, or the person who's invested in a protocol and is supposed to be earning a high rate of return, who possibly won't get it. And I feel there's lots of, even the idea, a lot of the Web3 ideas around there's a very funny video clip that someone tweeted a while ago. I think I retweeted it, where it was Mark Andreessen speaking to a podcaster, and Mark Andreessen was talking about the wonders of Web3 and how they'll allow all of this monetization. And the guy kind of said, well, I've got a podcast and it's monetized and I'm doing all right out of it. Like, how will Web3 improve this? And Mark Andreessen talked in circles and circles, and he couldn't come to like one possible advantage of this sort of microtransaction, like a way that would monetize it better than just sort of turning on monetization in YouTube does for people like you and I.
Mm-hmm.
And there's kind of this idea out there that's been pitched to people. Like, I guess we're being told that people like Facebook are sort of taking our data and monetizing it, and that Mark Zuckerberg is getting hugely wealthy out of my data.
Mm-hmm.
But the truth is that my data on its own is worth nothing, right? Like, data like that is only valuable when you have all of it, like when you have a large aggregate of when you're able to see what human society is doing rather than what Patrick is doing.
Yeah.
And people are being told with Web3 that, instead of there being a Facebook, you'll have your own version of this that's somehow hosted by someone who doesn't seem to be getting paid to host it, and that you'll get to monetize, like we'll say, every time someone looks at your LinkedIn profile or looks at your Facebook page or whatever it might be. And it strikes me as a very complicated version of the world where I don't really see people making much money out of it. Like, I wouldn't bet on, I wouldn't want to have to live off of the income I could make out of hosting my own personal Facebook page, And I think that there's even, I had a very interesting conversation with, now I can't remember his name, but the, oh gosh, I can't think of it, Quincy Larson. I don't know if you've heard of him. He has,
No.
it's called a free code camp. He basically teaches people how to code for free
Mm-hmm.
on the internet, and it's a great thing. But I had a conversation with him a while ago because he's very much from that early internet point of view, the information wants to be free idea.
Yeah.
And I find it interesting that in many ways, like, the internet has hugely improved, but I would also argue that there's sort of become less and less sort of free data on the internet compared to in the late 90s when I first started out. Like, for example, back then, you were able to, like Yahoo or MSN, there were tons of companies that just put all of the stock market data for free up on the internet. You could just download it and do all of these studies and whatever. And that's actually how I started my career, was just downloading data from the internet, analyzing it and finding investment opportunities. And I sort of look at the world today and think that a young version of me would sit down at their computer and it would just be paywall after paywall, even things like academic papers all hidden behind paywalls. And I don't know, there's every news article hidden behind paywalls. And I slightly worry that the Web3 version of the internet is just one huge paywall for just everything. And that doesn't strike me as an improvement. But I
Mm.
might be wrong. I might misinterpret their vision. But
Yeah, interesting. Yeah, I can fake an intelligent comment about this, but I don't know too much about Web 3.0. But to follow on your sort of this bleak outlook, I think it's time to talk about emerging markets.
yeah,
in the sense that, yeah, I mean, I've noticed that also with the videos you make, I think you now just made one about the international China debt crisis that seems
Yeah.
to be garnering a lot of interest. I also know that you are working on research for the case of Sri Lanka.
Yeah, I
And
kind of, I probably will have a video up on Thursday or Friday on that topic. So,
So, shall we talk about the trend first? Like, I think this is something I talked about in my Sri Lanka video, that the China story is related to this trouble in emerging markets, but I don't think it's the full story.
yeah,
But there definitely seems to be like a turning point, right? So much stress, like. Sri Lanka is obviously now crashing, but Afghanistan probably has already crashed. But
yeah,
the world has lost a little bit of interest in that story, it seemed. Um,
yeah.
also, there's not a lot of data out, I guess. But there's much more like Lebanon, Tunisia, Ghana, I think, is in
Ghana,
trouble,
looking rough.
Zambia. Yeah.
Bangladesh. Yeah, no, it's sort of a fascinating thing because there is a lot of stress in emerging markets, and it's not a single factor thing. Kind of like your video on Sri Lanka summed it up awfully well because there were 4 to 5 different forces all applied at once to Sri Lanka that caused this collapse. And when you look at other emerging market countries, they're all coming under pressure, but often different pressures. Like you can't, like if you look at Ghana, the problems they have are quite different to Sri Lanka. They all are getting squeezed by certain big geopolitical things, like the strong dollar and inflation in the US isn't, it's almost a bit like a taper tantrum 2.0 kind of a
Hmm.
feeling.
Yeah.
Um, but you've got, and you've got kind of food inflation possibly coming from the Ukraine situation. Um, just there are a lot of problems kind of squeezing in on many of the emerging markets right now, and yeah, it's a fascinating. It's funny. I made my video about China. But basically, what's interesting to me is that China, in I think it was 2013, sort of started with this Belt and Road Initiative. The idea being to, sort of build out trade infrastructure, kind of a new Silk Road around the world. Um, and they made an awful lot of loans, and many of those loans are not looking so good because they're too these are loans to countries that are looking quite shaky at the moment, and in many ways, depending on the country, there appears to have been a lot of malinvestment associated with that. For example, like cricket stadiums in Sri Lanka, and
Mm.
versions of that all over the world that weren't needed in an emerging market. Um, but I find it interesting. I guess I put up the video about China and the issues around the Belt and Road Initiative, and I was a little bit surprised that I got a certain number of angry comments where people said to me, "Why are you criticizing China?" And I thought, well, I'm not criticizing China. I'm saying that they made a bunch of loans to people who at the moment are struggling to pay back those loans. But it's interesting that there's a certain segment that viewed that as an accusation of wrongdoing, to frankly either side of that transaction, But yeah,
Yeah. Yeah.
it
Yeah.
would appear that there just is an awful lot of stress in emerging markets, and not driven by one simple factor. It's driven by an awful lot of what's happening in kind of global politics, global economics, just even fund flows. Like, I read the other day, about the huge outflows that have occurred from emerging markets. Like, and it's just investors who will say put their money in an EM index fund and have decided they've had enough and are pulling out. But of course, that then impacts people in those countries. So
Yeah, I had the same thing with my Sri Lanka video. So I tried to sort of summarize the four main narratives, and give sort of pros and cons, but the overwhelming amount of comments, or about being negative about one of these narratives was, "What China only 10% of the debt? You are a Western propaganda machine," and it got me wondering that the even small channels like ours are comparatively small. Are perhaps targeted by state actors who are commenting, which
Well,
is
it
is
is
quite
unusual
flattering, right?
because I have watched your video, and my takeaway from your video was that you said there were four main factors that caused problems. I think you kind of possibly weighted most heavily towards corruption in the country.
Yeah,
But you did not say this is what happened. You said these are the factors. I'll allow you to tell me in the comment section what you think the issue is. So you by no means blamed any of the four factors. You simply put forth that there are events occurring that conspired to bring about this crisis. But yeah, I even wonder if the angriest comments, if they've even watched the video, because it doesn't fully make sense. Some of what they have to say, but
yeah, perhaps. Although I mean, in their defense, there is of course some power in choosing the narrative. So I did come also across narratives that I thought were ridiculous, and so I didn't present them. So I guess by presenting China as one of those narratives, I do signal that I think it's not complete bullshit. Oh, if
yeah.
I was just thinking if I
Well,
need to beep myself on this stream.
one of the things that's interesting, like the reason that China, as a big lender um, to Sri Lanka, the reason it's interesting is that we have more of a history. There's about a 70-year history of kind of how the Paris Club deals with emerging market restructures, like basically when loans go wrong, which they do from time to time. There's a framework by which usually all of the countries that are owed money negotiate with the borrower to get paid. Like whatever concessions are made, they're made by all of the lenders together rather than on a one by one basis where different deals are negotiated. And the thing that's interesting about China as a lender to Sri Lanka, because as you say, it's 10% of the overall debt, but China doesn't tend to join in those group negotiations. They tend to negotiate their own deal, which is of course reasonable for them to do, but that then just leads to curiosity as to how that will work, and it means that other lenders to Sri Lanka kind of want to see how that goes because, for example, the IMF doesn't want to give money to Sri Lanka that will instantly just be handed over to China,
Yeah.
right? Like they're not going to negotiate a bailout that just hands money to another creditor nation. So that's kind of what's interesting about the current situation in Sri Lanka. And once again, there's no judgments in there. There's no claim that there's a high and moral country versus an evil country. It's that there's different ways of doing things, and it's interesting to see how things will work out when these two opposing approaches kind of collide within a restructuring in Sri Lanka. So.
Yeah, and now, sort of related to that, I saw someone in the chat also mentioning this. It seems that China itself is slowing down again, right? And this was something you talked about extensively, I think, roughly last year. Do you think it's now coming to, a critical point there?
Well, there are big problems with China in that that there is an excess of leverage within the country, largely tied to the real estate bubble. And by that I just once again, there's no judgment in here, but the average Chinese person has really only one investment opportunity, which is real estate within China. And that became a huge bubble. And in a country where, up 30 years ago, you were not allowed to own real estate. So when people own real estate, they make money on it. And then everyone decides the best thing to do is to own real estate, and you have this bubble form. But you then end up in a situation where real estate relative to incomes in China is probably the most expensive in the world, and entire families pool their money in order to buy a home that is sort of supposed to be a generator of wealth or a retirement plan. It's very problematic for the country if that bubble, both for the individuals and for the country, if that bubble bursts. The problem is that this bubble has been inflating. At first, the increases in real estate value in China made sense, but probably for the last 20 years, it's been an inflating bubble. And politicians have sort of chosen to kick it down the road, which is what politicians in every part of the world do. No one wants a crisis to occur on their watch. But right now, with Evergrande and everything else, the three red lines and so on, we are seeing the air coming out of the real estate bubble in China.
Yeah,
And then
but you do see
you also,
somewhat of a an interesting thing there, though, that they recognized it quite early on, no, and then they seem to do something about it, but then they always seem to pull back again when
well,
it
they
gets too far.
do, and this is just the nature of politicians. Always, you sort of have to stay in power, and you want, things to look good when you were in charge. And so, in many ways, like I'm not a huge fan of Xi. In fact, I think he's sort of trying to move China back to that sort of Maoist country. Like I don't agree with a lot of what he's doing, but he is at some point a day of reckoning kind of has to come whenever there's a bubble. And in a way, what he's done is force it to be now rather than in 5 years' time when it's inflated even further.
Mm.
And so it's almost back to our discussion of the financial crisis or whatever, that once in a while pain has to occur. There are gains and losses, and we can pretend to not have any losses for a long time, but at a certain point, the chickens come home to roost. And so China does have that problem. They equally have this issue, the zero COVID policy that they've been pursuing. At first, it was thought that they were just doing this in the lead up to the Olympics, that they kind of wanted to sort of do this for a short while.
Yeah.
But now it sort of seems like an endless lockdown, which, has to be hugely economically harmful, like to shut down all sorts of businesses and factories and everything in the country. And then you have this issue of emerging markets that they've lent money to being unable to repay them. And so, there are, China is experiencing a lot of difficulties. And there's even that, actually, I saw you on Twitter retweeted a very good post from Michael Pettis
Yeah.
maybe about a week ago on the comparison between China and Japan. And basically, there's kind of this, what do they call it? Like the middle income
Trap. Middle income trap.
gap. Yeah, where countries throughout economic history struggle to move from that sort of high growth, sort of world's factory economy into a mature economy. And it's kind of the problem of emerging markets is that they're always emerging, and it's very rare that you see one emerge. Like there's probably two examples of emerging markets that emerged were probably Korea, South Korea, and the United States. And other than that, the others just emerge and emerge, but kind of constantly collapse when they get to this turning point, because it's very difficult to to flip from one type of economy into another.
Yeah, no, that is definitely very difficult. Maybe we could add Taiwan and Singapore to that list. But
I think it's very inflammatory for you to refer to
oh
Taiwan.
yes, what did I say?
Ne- no,
What?
next thing you'll be going there on a visit.
That's true. That's true. Oh my goodness, Patrick. Yeah, we maybe we can censor that out in any sort of way, but let's not rinse words. Um, let me ask you this question then, because this is something, you're a professional investor, and I think also a lot of people who watch you are investors. And emerging market economies are very interesting and fascinating from an economist perspective. But why do you as an investor care about this stuff?
To be honest, I don't really invest in emerging markets. I have friends who do, so I have a lot of conversations about them and so on. In fact, it's a slightly interesting thing where it almost would it's kind of better for me to talk about topics about like this that I find interesting and don't really have a dog in the fight of, because I think almost the problem with discussing this stuff too much on YouTube is that if you actually did invest in these things, you might have an urge to sort of what can I say, like kind of pump your own investment. So I tend to a lot of the things, like when I
Mm.
speak about specific companies and whatever, they tend to be companies that I have no position in, simply because otherwise it's sort of filled with it's a minefield in terms of ethical behavior, so.
Yeah. And one thing that I wonder about that is that relates to sort of stock investing, where investing in a bad company might still be a good investment. And that's also something, like when people talk to me about investing in emerging markets, that I always try to at least remind them of, in the sense that that makes it super difficult, right? Because I can tell a story about how the Pakistan's economy is not well run, but it might still be an excellent investment because it's underpriced.
Yeah. Yeah, no, well, that's kind of the interesting thing, because even I think a place that a lot of beginner investors fall down is that they think the idea is to find great companies, like the idea of find stuff that you really like. If you like the product, it's a good investment. But of course, the question always is to what extent that's already encapsulated in the price. And so often, you know, uh, even a lot of the concept of like value investors, they'll find themselves investing in businesses that aren't necessarily the most exciting business in the world, but it's priced appropriately. I think, Warren Buffett has sort of talked about this idea of, I think it was kind of Ben Graham's idea, he called it cigar butt investing, that, the idea being that if you find a cigar butt on the sidewalk, it may seem like an unattractive thing, but the truth is there's probably a few puffs left in it, like there's some value left in that thing. And so it doesn't, investing, like putting your money into something, is usually done because the security is mispriced, rather than, it doesn't matter if you like the product or not. It relates to whether, kind of what the probability of excess returns are.
Yeah, yeah. And Patrick, then I also saw a question, and maybe we can move to some questions about the emerging market crisis after that. But I was wondering, sort of, which countries are on your radar? Like you obviously talked about Sri Lanka, but after that, are there already some countries on your radar that you find specifically interesting that are not in the news cycle quite yet?
Moment, not on a grand scale. Like I'm looking at the moment. I find it interesting a lot. If you just look at bond yields, you can kind of see which countries, as you mentioned earlier, places like Ghana, places like El Salvador, places like Ukraine, where there's obviously extreme distress in those markets. And so, were you to, yeah, I mean, you can look around the world and see a lot of emerging markets struggle right now. It's even can come down to what extent they import things like fuel and food, because these are the things that are exploding in price. Yeah.
Yeah, and that does seem to be a like if we wanna, because we haven't really looked for patterns, I think, yet in this phenomena, right? We've mentioned how a lot of countries are in trouble. We've related it to the China Belt and Road Initiative for some countries, maybe to the dollar or global financial cycle with dollar interest rates going up for others, and corruption for yet again others. But what I find interesting about this, about it so far, is that we've really again seen the importance of running trade surpluses, and I think that that's especially like the ones that didn't have that at all, like Sri Lanka, Lebanon were the first to fall, Pakistan, and on the other hand, Russia was actually able to withstand sanctions surprisingly well, at least for now, at least the financial sanctions, I think,
Yeah.
thanks to that trade surplus.
Well, it's an interesting thing because I think the biggest story in the world right now is energy. I think a lot of people, there was almost this idea in 2020 during the COVID lockdowns, where we saw a real reduction in the amount of energy used. I think there was almost this idea that there'd been a huge success associated with the environmental revolution and that everything would move to, sort of solar cells and wind turbines. And suddenly we're seeing the extent to which the world really, really, like almost global poverty actually is heavily tied to just the availability of energy. Like things like people don't realize that fertilizer, like nitrogen fertilizer, is just a function of natural gas. Like the nitrogen comes from the air, but we
Mm.
use a huge amount of methane or natural gas to make it. People. How businesses run, how everything, all of our costs, like if the cost of our food, the cost of imports, all of these things are tied to the cost of energy. And the world is right now realizing kind of how reliant we are on, fossil fuels, despite the fact that people don't want to be reliant on them. And that is kind of the almost the question of our times is kind of how the world will deal with this.
Yeah. So that actually reminds me, like this is something that's especially a hot topic in Europe, like, and if I can relate it to the market, the emerging market crisis, sort of there you had like the dollar tide is receding, and now you can see who was swimming naked. You know that expression. We
Yeah.
might actually observe something similar with the energy crisis, like for example. With huge increases in energy prices, we can now see that Germany is now under fire, at least in Europe specifically, that they were energy-wise living beyond their means or swimming naked, whereas France is weathering the storm much better because they still had all of their nuclear reactors.
Yeah, well, when energy was cheap, it seemed to not matter, and then all of a sudden, when it becomes scarce, when it becomes expensive, suddenly it matters a lot. And the German situation is kind of a wild one. Like, I think they even still plan, like, they have three remaining nuclear reactors that they plan on shutting down in December. Um, that's kind of a bit of a wild thing, and even a lot of the transitions, well, it's even there's sometimes what can I say, like just sort of big lies out there, like a country can claim if we shut off, we'll say, for example, natural gas extraction in our country, that we've done something green. But that's not
Mm.
really the case if you're just piping it in from another country or replacing it with, coal-driven energy from another country or something like that. And it's something I find a little bit fascinating, even in the overall ESG world. There was a year or two ago, BP was making a lot of noise about divesting fossil fuel assets, and they basically said, we're going to sell off all of these extra these we'll call them oil rigs, and that will make us a green company. And it's like, well, it only really is green if you continue to own them and close them down. Do you know what I mean? But if you BP, a responsible company, sell an oil rig to an irresponsible, badly financed company, that's bad for the environment because the same amount of oil comes out of the ground, but it's done in a much messier, less responsible way. And so, to a certain extent, there's possibly a lot of skirting responsibility that's gone on where people can claim to be green by sort of not touching the dirty thing themselves, but by still being a big consumer of it.
Yeah, yeah. And what ESGE stands for environmental.
Environmental, social, and governance.
Oh yeah, and that's basically like for the people. I'm not sure if everybody knows this. Sort of a new hot investment
It's
like
been
a
a hot
label, right?
topic. Yeah, it's been a way of telling people the overall concept has been around for a long time, but it's kind of become particularly hot where you get to tell people that they can invest in, we'll say, an index fund or something like that, but all of the kind of irresponsible or bad companies are the environmentally harmful or the immoral companies are removed from the index. So there won't be sort of oil, tobacco, firearms, things like that in your investment portfolio. And that appeals to people, particularly when they're told that the return will not only will they get to be a better person, but the return will be higher. And now a lot of that is coming under question. And even people are asking, are the things that are being labeled as ESG or environment, are they actually good for the planet, good for the world, or is it just a marketing trick? And that's kind of a question a lot of people are asking right now.
Yeah, yeah. And on the reverse, I also saw someone commenting in the chat that it's also it can also be seen the other way around, right? Like that. We should be wary that we're not now imposing that emerging markets first get off the dirty fuels because they may really need it in their development, and that we do it sort of a little bit later because we're already fairly green. I know we're not, but do you see?
I think that is a thing that is happening in that if you look at sort of CO2 output from the developed world, it kind of flatlined slash reduced maybe even 20 years ago. I haven't looked at the charts in a while, so I'd have to look this up again. But of course, global CO2 output has hugely increased just because of global development. You know, as people get wealthier, they tend to consume more, and any sort of consumption equates to, you know, greater energy usage. And yeah, and then I think that in the Western world, there is an awareness that maybe it might be wrong to sort of, I don't know, tell someone in Africa that they have to run their hospital on a solar cell while we get to run ours on a stable electrical grid. But you know, these are all these are all problems that I guess people are trying to solve right now and trying to come up with reasonable solutions to. But you know, we're kind of there's always problems associated with implementing anything new.
Yeah, yeah. And so I think with that, we've been talking for a long time already. It's time to maybe grab a bit of a coffee to. And also, I'm getting some very subtle signals that my wife wants to use the same room as a yoga studio in a couple of minutes. But let's say it's all about the intellectually heavy conversation that we've been having that has exhausted me. Patrick, we've talked about the financial market, efficient financial market hypothesis, crypto markets and their relation to money. And then also emerging market crisis. So a fairly heavy on the academic side, perhaps, and economic side discussion, which I'm really happy with because we're on the Money and Macro channel. Thank you so much for coming on. And what I will do is I will edit this conversation into a nicer format, add some subtitles, and also make it into a couple of clips and post them on my second channel, Money and Macro Talks. Is there something that you want to close off this conversation with? Patrick, maybe say something to the Money and Macro viewers to get them over to your channel if they are not already there, which would surprise me.
Well, actually, it is funny, as you mentioned, I see in my YouTube analytics that a huge overlap between our channels. I think we have a lot of viewers in common, and I'd just like to thank everyone for tuning in, and hopefully you guys found the conversations that are interesting.
Excellent. Yeah. So with that, thank you all for joining. I'm sure Patrick and myself will speak again at some time. So I also saw the Plain Bagel in the chat, who I'm sure we'll also talk to again at some point. Yeah, thanks again. And with that, I will transition us